Hey traders, what's going on? Jamie Saettele here. It is March 26, 2021, and welcome to the end of week power hour, where I will be going through a lot of FX majors, look at some commodities, and I'll take questions. Last week we had a bunch of questions on crypto. Let's see if we can get any other questions maybe on FX this week. There's some very interesting opportunities, I think, in yen crosses. Always, we'll look at the dollar majors, but some very interesting opportunities in yen crosses, notably Aussie yen. So we will get to that. All right, let me work on the screen here. Let's see what we can do. Let's see here. All right. All right, so can everybody see the screen? We should be good. Okay, great. All right, so I'm actually going to start with some seasonality charts. We haven't looked at seasonality charts, I don't think, yet in these webinars that I've been doing with Scandinavian capital markets. But seasonal tendencies, it's just one tool, right? One of many in the toolbox. The way I look at markets is it's kind of a weight of evidence approach, if you will. Obviously, price pattern, etc., is the most important. But seasonal tendencies are a thing with currencies, and I, put a good deal of, weight on that information. So we've had, as I've been a dollar bull, essentially since the calendar turned to 2021, and we have had a pretty good run, right? And as you can see, this is DXY seasonality. So this is the red line here is 30 years of data. Essentially, it's just how the dollar tends to trade over, the calendar year over the last 30 years. So you can see here that the seasonal strength period essentially ends this week. Okay, you go through March, and April tends to be a pretty bad month for the US dollar. And, again, that's just a tendency. That does not mean that the dollar is going to tank. None of this means anything. It just means that the dollar has tended to decline in April. So I thought that was interesting. So it's nice to have that seasonal wind at your back. All right. So keep this in mind as we look at some of these other price pattern and sentiment indicators. And moving along to that, sentiment indicators. I talked a bit about this last week, but one of my go-to, again, tools in the toolbox is just go to Google, type in US dollar, or you can do this for really any asset, and see what the headlines are that come up. If you were to do this back, say early in the year, you'd have it. When I write my updates, I will throw in, interesting headlines that come across, and really take a contrarian approach to them. My book, Sentiment in the Forex Market, I wrote, at this point it was like 12 years ago, but talked about how to use headlines to, have an opinion on the direction of a certain market. There's certain words that you look for. Predictions within headlines are the best to fade, and we actually have one of those here, down here. I'll get to that, but look how different these headlines are compared to what we had early in the year, right? Why? So this is just from 20 hours ago from MarketWatch. Why the US dollar continues to rise, defying a 2021 consensus trade. Boom, there you go. Okay, well, yes, it was a 2021 consensus trade, which is exactly why it did not decline in the first place, right? The US dollar has rallied. So we're getting to that point now, that psychological, pivot potentially near term, and you're seeing the dollar actually come off today, and we'll look at the charts here in a bit. Okay, let's continue to look at some of these headlines. This is from investing.com. A stronger US dollar will crush the reflation trade. Well, I've got news for you. The reflation trade in some spots has been crushed for a while. Have you seen what gold and silver have been doing since last August? Have you seen what happened to oil over the last, week and a half? Have you seen what's happened to, Chinese equities, right? Look at EEM or FXI. Those are the ETFs for emerging markets, which China's a big part of, and FXI have gotten absolutely destroyed. Okay, so yes, the reflation trade has been crushed as the dollar has rallied, right? This is a prediction. They're predicting something that already happened, right? DailyFX, place I used to work actually, has King Dollar returned. I don't think DailyFX was talking about King Dollar back in January, right? It would not have been popular to do so, right? But now we are talking about King Dollar. The mere fact that King Dollar has entered the lexicon once again indicates to me that the easy part of this dollar long trade is over. All right, so let's look at the dollar. Okay. All right, here is a US dollar. Again, my favorite index to look at. US dollar chart, and we have this is right here. What is going on here? Okay, here we go. I got it. So we have a retrace here, right, from the entire rally from March to February, March 2020 to February 2021. You see this low here, September 1st. We've reached that. In my updates, I've talked about how that level is probably what I call a decision point, and that's a great way to think about markets, by the way. Trade from decision point to decision point. Well, we've reached that so-called decision point, right? Strength up to that level, the easy part. We've reached that level. It's also, by the way, we just yesterday, I think, missed it by a couple ticks, but it's the 23.6 retrace of the decline from March 2020. 23.6 is actually a fib. Many people don't pay attention to that fib, but you should. Goes 23.6, 38.2, 618, 786. 50% is not a fib. It's just midpoint between 38.2 and 61.8. But 23.6 is the first one. Okay. If you wanted to even go another one, you can go 14.6. So in any case, still constructive on the dollar, but over the next couple of days could certainly pull back some. And in fact, you see the center line here, the median line, that is where you want to look for support once we pull back. So let's zoom in a little bit here. Let's go to a 4-hour chart. So this is zoomed in, but with the same lines, levels, etc. You can see here that we've got that center line. That is where we want support. And if we throw a channel up on this from the February low, guess what? We would intersect that, say, early next week. It would be early next week. So if for some reason we have a surprise, maybe drop over the weekend, again, I'm just thinking out loud. None of these are predictions, but they are, things to be aware of. If you had an early week drop, you'd probably be wanting to look for support at that level. Okay. Now, eventually, the big level for resistance in the dollar, where I'd really, probably want to actually turn dollar bearish again. If we got there, it'd be up here about 12,030 or so. All right. That's going to be a parallel that you can see had been precise support and resistance since last summer, last June. Okay. So again, those are the key levels. Essentially, if you're sitting at home right now or in your office, your levels to watch here are 11, 8, 10 or so, and 12,030. All right. Okay. Let's look at euro. Okay, let me see here.